We just released our latest episode of the Commercial Property Investors podcast today, and I wanted just to talk to you a little bit about that episode and some of the things that are in it, particularly about context, because there's a lot of commentary out there at the moment about commercial market, as well as other markets, of course, because things are a little bit unsettling right now, and you just have to make sure that you're listening to that context, to that content with context. So when the person's talking to you, what are they actually talking to you about? When you're reading the paper and it's telling you about retail, for instance, what does that actually mean for your personal investment strategy? Because there's three layers I want to talk about quickly. The first one is about actually, is it a passive investment or an active investment that you're looking for? Are you actually getting involved with investing in commercial assets that are going to give you an income, and they may even have a client in there already, a customer or a tenant in that building already, so all you're effectively doing is parking money and buying an income, and there's nothing wrong with that. There's some great deals for commercial to do that. But if you're a private investor like us who wants to grow your value of your portfolio, then active investment is something that's really important to consider. I used to think commercial was all about building up your money somewhere else, earning it somewhere else, and then parking it in commercial for an income. But actually, I discovered along the way that you can really add value. And that's by taking on projects where you think you can change the income in that building. So as an example, the one I'm in just now is one of our more recent acquisitions. This is definitely going to be an active investment. As you can see, there are no tenants in this space. And this space is only effectively about a quarter, in fact, slightly less than a quarter of the size of this building. It's quite a big building for us. It's just over 30,000 square feet. Half of it's let, so half of it has got a passive income. There are leases in place in that piece of the building. But in this bit, we're going to try and add value by creating some space that fits more modern market requirements. So that's the first thing, passive and active. The second thing to consider that people are talking to you about commercial and context is, what location type are they talking about? Are they talking about primary, secondary, or tertiary? Primary is somewhere where you might have a city centre location, pretty good covenant on the lease, something that might be a 15-year lease with a customer that is probably going to stay around, although that's not always the case these days. But those tend to come with a lower yield, and they definitely tend to be passive investments. Not always, but they tend to be more expensive. The second one is secondary, and the third one is tertiary. These are the types of places that we invest in because we feel we can add value better there. And to be frank, they tend to be a little bit less expensive to buy. So your cost of making mistakes can be a little bit less. I'll just carry on walking around it so you can have a look at this space as we talk. The third thing is actually considering about what type of commercial property these people are talking about. Are they talking about retail? Are they talking about leisure? Are they talking about hospitality, office, storage, industrial, bare land? There's loads and loads of different asset classes within commercial. So when you're looking at the commentary on how things are going out there, you need to think about these different layers. And what is it that this person is talking on authority about? Is it one of those locations? Is it one of those investment types? Is it as a passive investor, an active investor, as somebody who invests in property funds? All very different. If you're a private investor, like we are, and you're trying to develop your value in your portfolio, which is definitely possible, then active investment might be more for you. And interestingly, although there's lots of macroeconomics going on right now, which are filtering down to local level, in local secondary and tertiary locations, your income and your value is much more determined by that local market. What is the supply? What is the demand? What can you do with buildings that people have now used them for their the original purpose, and now these buildings need repurposed? What can you do? What can you identify in your local market that this building could fulfill? So for instance, in this space here, it's about 6,000 or 7,000 square feet. This will be probably divided up into about 12 different units, all different sizes, different types of clients. But it's something that our market, where we are, there's a pretty reasonable demand for it. It might be the same in yours. I have to say there's not many markets I've looked at where this isn't in demand, particularly with the way the economy's going now. So those are the three things I wanted to talk to you about in terms of market context. The other thing we cover on the property podcast this week is actually about the real true value activity that we do. What is it that our business does that really makes it stand out? Because we do spend time renting space, we do spend time renovating space and basically looking after customers. But what's our true business? So I go into that on the podcast, so you'll need to listen into that. And it's in the usual platforms. You'll find it on iTunes, Stitcher, and all the other ones. If you really want, I'll pop the link in the post below, but really in the links below, the comments below. But what you're looking for is if you type up commercial property investor, you'll be able to get our most recent podcast. It's number 24. I can't believe we've done that.